Hey guys, my name is Justin, I'm 16 years old and I'm an options trader. When I first started trading options, I had been researching and watching videos about options on and off for about a year. But even then, there are so many things I wish I knew before starting to trade options. These 5 things would have definitely helped me when I first started, so I hope they help you guys as well, whether you have never traded options in your life or if you have only been doing so for a short time. So without further ado, here are 5 things I wish I knew before starting to trade options. Number 1. When you're trading options, or doing any sort of investment for that matter, it's so important to keep position size in mind. And by that, I mean keeping your position sizes both consistent and making sure that the position sizes that you take fit the appropriate amount of risk management you should be taking compared to your account size. To better explain why keeping your position sizes consistent is so important, I like to use this example. Imagine you take 2 positions, a $100 call on Apple and a $500 call on Tesla. For the purposes of the example, let's say that you make a 50% profit on the Apple call and you have a 10% loss on the Tesla call. Hey, that 50% profit is great, right? Here's the thing. From that Apple play that got you a 50% return, you made $50. On that Tesla call, you lost 10%. On a $500 call, 10% is still $50 though. So at the end of the day, you've gained $50 and you've lost $50, so you're back at break even. Let's say instead that you kept your position sizes consistent and took that $500 Tesla call, but then took 5 of the Apple calls so that they would both be valued at $500. When your Apple calls are up 50%, instead of being up $50, you'll be up $250. Then when your Tesla call is down 10%, you'll still be up $200 on the day. The $500 position size I mentioned ties into the next point I wanted to bring up about position sizes. In general, I try not to use more than 5 to 15% of my account size per position. This is one of the most important things to do for reducing your risk. If you have a very small account, it may be hard to find options that fit this risk management strategy. Because of this, you need to be taking this into account when deciding what type of investments to make. Number 2. One of the most beneficial things you can do, either if you have never traded options before, or even if you are already experienced with options trading and want to try a new strategy, would be to start paper trading. This is when you run simulated trades without using real money, and you can see if the strategy you are planning to use will be profitable, without risking any of your own money. This is one of the things that I honestly think can take your trading to the next level. If you use the Thinkorswim platform that TD Ameritrade provides, paper trading really helps you get comfortable with the platform. And also their on-demand feature lets you go back in time and place trades in and see how they turn out. The one downside, in my opinion, to paper trading is that sometimes it can make people overconfident, as when you are not using real money, emotions tend to step in a lot less. So when you eventually do start to trade with your own money, make sure to start slow and be careful. Your emotions can be a huge factor in how a trade goes, and this factor does not come in too much while paper trading. Always only trade with money you are 100% okay with losing. Investing and trading is risky, but it is one huge learning experience. If you go in expecting to make huge amounts of money in a short period of time before you learn about it, you'll be very disappointed. You learn from every profitable play, you learn from every loss, and every experience you have leads to you being more knowledgeable in the future. Number 3, cash is a position. There's gonna be those days where the market is super choppy and no setups seem to be working out. When you don't see anything working out, it is completely okay to sit out of the market. Cash is a position, and sometimes it can be one of the most valuable positions to be in during an uncertain market. I definitely know that some of my worst losses were due to me trading when I didn't see anything I was super confident in. So I tried taking positions in things that really didn't follow my personal trading strategy, because I wanted to make sure I was trading every single day. A day where you don't lose or gain anything is much better than a day that you would be making a mistake you wouldn't normally make and lose money. Moving on to number 4. Have a trade plan and stick with it. Before you open a position, you should have a plan. Depending on your style of trading, the type of plan could vary. But personally, before entering any trade, I really like to identify at least a price that I will cut the position at, which is either my mental or physical stop loss. Also, I want to have some price targets I want to take profits at. And if I'm basing my position off of a trend, I want to identify that trend, and if the trade starts to break that trend, I can then have a better idea if I should cut the trade or reevaluate how I want to be approaching it. If you know how much you are willing to lose and where you would like to take profits, you'll see that with a plan you will be much more confident with every trade. Number 5, small gains add up. You can't go around looking for every play to be a 100% or more play. If you stay consistent and keep your position sizes appropriate for your level of risk management, you'll see that after a while these baby gains really start to add up. Of course, once in a while you may have that play that goes extremely well, but the mistake that many traders make is after they get that one extremely good trade, they then try to chase other huge trades like that, and they end up losing all the money that they just made. Always take profits while they're there. Of course, more is always better, but sometimes good enough is good enough. Risk management is everything, and the better risk management you have and the more consistency you have while trading, the more you'll find yourself being more confident about your trades, and the more you'll see yourself increasing the amount of profit that you obtain, and the less you'll see yourself having major losses on your trades. So, those were the 5 things I wish I knew before I started to trade options. I really hope this helps you guys, and if you have any questions, make sure to leave them in the comment section below. If you enjoyed this video and found it helpful, make sure to hit that subscribe button and leave a like and comment on the video. Till next time, my name's Justin Roth, thanks for watching, and I'll see you guys soon.